Hi, I am Mr. James, and welcome to another of my accounting tutorials. Today we will be looking at paper 2 of 2019, Accounting Unit 1, Module 2.
This question, we are given a list of balances and we are asked to prepare a multi-step statement of comprehensive income for Cotton Limited in accordance with IAS 1 and IFRS for SMEs. Okay, so if you have not read those documents yet, IAS 1 or IFRS for SMEs, you should pause the video, go take a look at them, and then come back to statement of comprehensive income. And what we should note on this here is the returns and allowances, sales discounts. It's not as you learned in CSEC, but under the IFRS for SMEs, they must be deducted from the sales, right? The allowances here, it meant the provisions for bad debt and bad debt. Okay, so you get your net sales of 689,500, and from that we take the cost of sales and we will get our gross income. Now that's multiple steps. It, Another way of doing this would have been to take the revenue, the 689,500 here, and minus the cost of sales, and get the gross income down here of 132,900. The rest of the details would have been shown in the notes to the financial statement.
The selling expenses and the administration expenses, we have to have them under the correct heading here. Okay, all that we have here are related to the selling. Take the total and we project it into the other column. Administration expenses, same thing. All these here are related to the administration expenses and we put them across here. And we will add these two and take it from the gross income up there in the previous slide. The other expenses and revenues, and these we can net them together, but we cannot minus them and show one figure. We should show both the revenue and the expense separate. Then we have the rent, revenue and expense separate again, and we total them and we put them in the other column. We add down and take it from the gross income. We will get the net income before tax minus our tax 25%. We get the net income after tax. Now, it is possible for us to show these items, each one of the headings in the expenses and revenue again. Just show the total here and put the details in the note to the financial statement as we distinguish between corporations and cooperative. Now, when we are doing something like this, we have to do it under headings and compare, right? I have 5 headings here under which I will compare them and I will go through one by one. First one is membership. Corporations have restricted memberships, unrestricted membership, sorry, except for the private company. Cooperatives are open to all who can benefit from their services. Next, we have administration. In a cooperative, each member has one vote regardless of the number of shares held or other forms of investment in the cooperative. In the corporation, votes are related to the number of shares held, usually one common share carrying one vote. Okay, so cooperatives have one man, one vote. Corporation, one share, one vote. Distribution of income. In a cooperative, surplus income is distributed to members according to their transactions or participation in the economic life of the cooperative. It is called interest or patronage refunds. In a corporation, net income is paid out according to shareholding and in the form of cash or stock dividends. Next, we look at ownership. In a cooperative society, members own shares and can be refunded their investment if they wish to no longer be a member. Shareholders in a corporation cannot be refunded their investment but must sell their investment to someone else via the stock exchange when they no longer wish to keep it. And then finally, we have the ease of transfer of ownership, or how easy it is to transfer ownership from one person to the other. In a cooperative, in general, members cannot transfer their ownership, but in a corporation, shareholding may be transferred easily via sales on the stock exchange. Okay, you cannot say who you are going to transfer it to in the case of a corporation. You merely go to the stock exchange and you sell it. In some cooperatives, members can transfer or are allowed to transfer their ownership to their children or members of their family. But in general, they cannot transfer their ownership to another person. We look at the next part, and this part deals with partnership. In particular, it deals with partners' equity and the retirement of a partner. We have been asked to prepare a statement of partners' equity for the current year, and on 1st of January 2019, following the closing of the 2018 accounts for Southside Auto Repairs, one of the partners, Davis, retired from the partnership and sold his interest to his fellow partners for 80,000. Rachel and Grant, the other two partners, agreed to make the payment to Davis from their personal funds. So we will note here they didn't use the bonus method or the goodwill method at all. Okay? Prepare the journal entry to record the sale of the partner's interest. Right, so we will look first at the equity. The three partners share profits in the following ratios: Davis a quarter, Grant a quarter, and Rachel a half. At 31st December 2018, the following capital and drawing balances were reflected on their partners' account. The statement of partners' equity for the current year, the share of the profit 80,000, shared quarter and a half, it was 20,000, 20,000, and 40,000. Minus the drawings, we get 13,000, 14,000, and so the balance on their current accounts would be 7,000, 6,000, and 17,000. Their capital balances, which is fixed, is 60,000, 70,000, 100,000. Okay, so the total equity would be 67,000, 76,000, and 117,000 respectively. Okay, now what is going to happen now is this capital balance of Davis is going to be transferred to these other two. Okay, and the 7,000 here, that will not be transferred to his capital account because this is already cash that he can withdraw, and he will not be transferring this to the other two partners because he's not going to sell cash, right? So final entry would be Davis Capital 60,000 debit and Grand Capital 20,000, Rachel Capital 40,000 to record the transfer of Davis interest to Grant and Rachel. Right? Notice the 80,000 did not we did not use that because that is a private transaction between the owners, between the partners. It does not enter the books of the company. Okay, and that brings us to the end of this module. I hope you found it useful, and I hope it was helpful to you. And if so, you would want to give it a thumbs up. If not, you can give it a thumbs down. And I will see you in the next video.